as what you're going to trade. So let's tap into that talent.
With my setup, what I first saw was the very first thing I saw was my strong move, my $2.50 move off of yesterday's close that started in the pre-market, and so that signaled to me that SPY had enough upside momentum to take my trade. Next, SPY broke above my 290.50 R1 level with a full 5-minute bar. And on the pullback to that level, we had very large bids step up. They heavily outweighed the asks at R1, and they were able to absorb what looked like selling into the level. And no matter how hard the sellers pushed, those bids would not budge. And so that's where I entered my 2 tiers of risk for the trade. And so on the next slide, I can go into exactly what I was looking at on the tape when that occurred. So here's where SPY is pulling into my 290.50 level. This is the first touch of the level, and you can see we have these red prints being filled at the bid as we come into my level, indicating that there could be selling into my level. But then if you look at the bids, you can see that the bids get very massive on this touch and absorb that selling pressure. And it looked to me that these bids would not budge. No matter what orders came in, price would not drop below that this .50 level or lower than that .45 wick that we just saw. That to me is my see it moment. That's where I enter my 2 tiers of risk, because the tape tells me that 290.50 is going to hold on this retest, and it's not going to fail and drop out and stop me out of my position.
Okay, good. And so, and your stops are below that 45-cent area?
My stop is below the breaking bar low. So the initial candle that broke above 290.50, I placed my stop below that low because I don't know how low this initial reaction that got to .45 can go, but I know that with a break and retest of a level, it's generally safe to put that stop below that breaking bar.
Okay, good. All right, let's see what else you got with the trade. So good. I mean, good use of, I like the idea of you focusing on a see it moment as well. You incorporating that into your trade. We see the best trading from the best traders when they're being very aggressive after they see it. They're waiting, they're waiting, they're waiting. They're waiting for a particular setup that they like. They're looking for a product or stock that can really move and has a catalyst in it, which you identify. They're looking for longer-term technicals that are spot on. They're looking for intraday technicals that are spot on and in the direction of the trade they want to take. And then, they're overlaying, they're reading the tape skills. They're overlaying the moment where they can see it, where they see the stock stop going down. They see the pull in, they see the area to risk off of, and they're going to get super aggressive. If you can see that moment when the trade is likely to work, you can see that moment when the trade should work from here right now, right away, you can get so big and be so aggressive. And that's what we see with elite traders. That's how they can get so big. They have an exact area which is most important to them. They have an exact moment from which they think the trade can work. And so, they're just super aggressive. And they're super aggressive because they're seeing it. So, good. What else we got?
So from there, it was all about managing the position. I didn't have any overhead levels until 293, and so I wanted to hold until price reached 293, unless I saw a big selling come in prior to that. And I ended up seeing some big selling at 292.50 on the tape. There was a very large sell brick that was thrown at 292.50 once 292.50 was broken. And so what that means is there was just a huge number of bid prints that were very large in size, and it felt like they were using 292.50 for liquidity for that sell. That was a change in character of the tape to me, and so I took off 25% of my position, even though it wasn't at my level, to lock in profit and cover my risk. Then SPY made its way to my 293.05 R2 level, and that selling continued and increased in magnitude once we got to that level. And so I took off 50% of my original position upon that reaction with R2, and I placed my stop for the remaining position below that consolidation under R2. And shortly after